record. All right, sorry, I just started the record now. It didn't remind me again. Okay, all right, so let's go back to the daily again. So you guys that are here, so just take your time. Take your time. Are you guys following what I'm saying? Are you guys following? If you're following so far, can you just let me just know that you're following what I'm saying? Are you following what I'm saying? Are you seeing everything? Okay. I've gotten one response. All right. Okay. Any other person? Any other person listening? I'm following what I was saying. Any other person? Okay. I think only one person is responding. Okay. Second person. All right. So we are good to go. All right. So let's go back again. Remember, we have two levels. The low we have on the daily low, we have the blue line. Then the previous resistance, we had the red line. Then this candle that closed above, what do we have? Let's put it above, like where the candle closed above now. That is this candle that engulfed this previous one. We have this candle. So we are going to use another line. We're going to use another line there. We're going to use a different line. All right. So once it closes out, remember that this candle has not formed on the daily. Remember the daily technique I'm giving you guys now. Like when this one formed, then this one closed. Yes, this one has not happened. Remember. So let's put the high. Let's put let's also put the on the high of that day when it closed that day, the high. Okay, this is the high. So let's change the color to the high. Can we use let's use a magenta? Okay, all right. So now we have 3 points. We have the low, we have the previous resistance that was broken on the daily time frame. The top of the week is regarded as the resistance on the daily, because what happened is that the market actually broke above this point finally and closed above. You can see the bullish candle. Then what happened next? It closed above it. So you've gotten the low point, you've gotten the middle point, which is the resistance, then the high point, which is the top of it. This is the structure that got broken, the red line. Okay, now let's now move to the lower time frame. This is all you do. These three lines are so powerful because it's on the higher time frame. You won't be bothered about I'm getting confused. What is happening? And resistance and support so much. No. Just stick to this and you get what I'm trying to say. Okay, so next thing now, let's go to the 1 hour time frame. Let me now show you what propelled this whole thing. What propelled this whole move? What propelled this whole move? Now, let's come here and see what happened. All right, remember our lines. The red line is the resistance. The daily got broken. Then the what? Then the magenta line is the what? Is the what? The top of the high that closed on the daily time frame. Then the blue is the support. All right. So now let me now show you how this market. You see, this was the high. Remember, this was the high of that day. This is a whole day. A whole day. All right. Now this is what is the point that got broken. Now look at how this point played out on the daily time frame. See, believe me, daily time frames are so powerful. They are so powerful. See, right at this point, you see how you filtered off the noise of this whole point here and this whole point. Now look at right here. You see right here. I see that's the resistance on that daily. Now let me show you even before that. Before the market actually did that, let me show you what the market did. On the smart money way, remember they have to clear equal lows, then move the market in the opposite direction. Now see, before that happened, look at what happened here. We have a low here. You see, all these rejections here they are like support levels. You see, they are like support. Now see this point here. Are you seeing? Are you guys seeing this point here? Extend it. Not even extend. Just put it here, right here. Okay. Now you see this point here. These points are equal lows right here. So most times on my charts, I usually put, you'll be seeing symbols like this, equal lows. You'll be seeing something like X on my chart. So what that means is that the market just came and took out equal lows. Like we had equal levels. We had support where the market was rejecting. The market was rejecting off its support area over and over and over and over. And all of a sudden, the market started going down. Like the market started selling off. And when it started selling off, what happened next? You see, all these points here, we had rejection dojis, we had rejections, and here is support. Yes, the market is ready for a buy. Are you seeing this point? Market is ready for a buy. Yeah, people are already buying because you are seeing bullish candles momentum. People are buying. You're like, okay, the market is about to reverse. The market is about to reverse. The market is about to reverse. This is what they do. They create this level, create all these points, create all these points. Then all of a sudden, what do they do? They will bring this candle down. Remember, this market is here is like a support now. They'll close this market down. After they close it down, the next thing they're going to do is what? They'll push it back up. So you see this level here. Let's send this line over here, this area here. Okay. Now, what they will do now is they'll push this market down. Are you seeing this candle that closed below? Okay, let me make it stable a bit so you won't get confused. I want to use this arrow so that you can see everything I'm doing. Now you can see this level here. Okay, it's support level. Now see these sell candles that actually came down. It closed down. Then what happened? It did a retest for a sell. It also trapped the next set of people that want to start selling. Remember, they have to trap a lot of people. It's not only the buyers. They can also trap the sellers too that want to sell. Now this market has closed below this level. Then you can see the retest. It came down. Then all of a sudden, bullish momentum came up again. So immediately this candle goes back into this point, into this area where the market closed off, took out these lows. Immediately that thing happens, be prepared for a major move to happen. You are not jumping in. Do you know where you're going to jump in? You are going to jump in at a break of structure. Now, let me show you the break of structure now that I'm always talking about, the break of structure. Now, this is the move that took out everybody. This move right here. This is the institutional move that took out everybody right here. Let's change the color. This is the institutional move that took out everybody. All right. So after they took out everybody, what happened next? After they took out everybody, what happened next? You see this point here. You see this rejection right off here. Remember, when this thing is happening, you don't know that this is resistance. You don't know. So you are just following the market. You want to see each level being respected. Now, you see this rejection here. This market starts going down. Starts going down. I see it starts going down. To this point again, remember that here was acting as a support. Then this market broke below it, came back in again. I see came back to that same zone again. You are not entering of this trade. You want to wait for this market now to break this structure. This is now the recent structure of the institutional guys. This is their structure now. This particular one here, right here. That is the institutional level. This is the one you want to pay attention to right here, because this was the institutional move right off here that propelled this guy, this one. This is the low and this is the high of this move. Now this market comes down here. Now we see any candle that breaks this high, this point now becomes a structure. Now this is where I call break of structure, right off here, right off at this point. Break out of structure, very, very minute. Sorry. Break. All right. So break of structure. Now you see break of structure. Now let's move. Now we see now When this market broke this structure right here, what happened? It went up above. What happened? I think it went up above. And when it went up above, what happened? It came and retested that structure. You can see in line with that your daily level that you marked out. Now remember, this is a daily. This is a daily time frame. A daily time frame. So right now, entering of this trade on this daily time frame is quite risky because this market now did not create any mitigation point, like a sell to buy candle at this point. But this was in a daily level. This is just teaching you market structure first. So even if you place your pending order at this point, remember that this is a daily structure, a daily level. So anything that makes the market to now go below here invalidates this whole thing. It invalidates it. It's like this level is not respected. But you see how this market came down here, respected this point. Are you seeing? Respected it again. Are you getting? Right at this point now. We tested it as a support. Then started going. But remember also that this one is our what? It's our daily high. Now, when the market finally broke above it, what happened? The market came back and still tested it again and still went up. So this is just on the daily level. This is on the daily level. This is what happens on the daily level. I'm going to show you your entries now. I'm going to show you your entries. Right, but for me, I entered off right at this point. I entered here. Immediately the market, I just entered here and I put my stop loss just below this candle that broke above the structure. That's why I put my stop loss. So my stop loss was just below there. My stop loss was below right here. That's where my stop loss was. I put my stop loss. This candle that broke above the structure. That is where my stop loss should be. This is where my stop loss is. So, right. So your stop loss is very, very small right off here. So that candle that breaks above the structure, that is where your stop loss is going to be. All right. You're not using a mitigation candle kind of right here. So now if your stop loss is underneath there, what is your stop loss? Remember on G75, the lowest lot size is 0.005. So right here, your stop loss is about 3,700. 3,700. So if you multiply that by that lot size, this is $18. So this stop loss from here to here is $18 loss. It's $18, guys. $18. If this market comes here, you're going to lose $18. That is your stop loss. This is very volatile. Okay? But remember, this is on the daily level. All right, $18 stop loss. Now look at what you've got. This on the daily level. Can you beat that? Can you beat that? You see what has happened already? Because remember, the market is just going up. It's not giving you any reversal pattern yet. It's not giving you any reversal pattern. Now see how much this market never even gave you a back retracement on the daily. The market still bounced up on the daily again, and you see up so far it got to about 60,000. And 60,000, you know how much that 60,000 will be if you actually held it. That is close to about $300, and you reach how much? $18. So this is on the daily level. All right. So I think we have to end this call and start again because the time is up. So I hope you guys followed this particular session, this particular one. Hope you guys understood. Let me come again before this call goes off. I hope you followed this explanation that I did. Hope you guys followed before the call goes off. I just have about 3 minutes something before it goes off, then we'll start again. So no response. All right. Okay, I think I got one response. Right. Okay, so that is basically how these things work, guys. That is how these things work. You just have to wait for these things to, play out over and over. So you can see beautiful structure right here. So something like this is how I can show you thousands of this on the chart. I can take it to currency pairs. I can show you can take you to boom and crash. Although I'm still trying to understand the whole thing on this using MT5, blah blah blah, and also I've not really found out boom and crash, trading instrument there. The only thing I saw was boom 1000. So I'm still trying to set that up, but I'm just for the purpose of today, I'm just doing this V75 and V25. I'm going to do so, but believe me, it works everywhere. It works. There's no there's no two ways about it. These things work everywhere, whether boom or crash. But all you just have to do is have to wait for a clear signal. Remember, you don't have to trade every day. You don't have to wait for clear setups to play out. The one trade can change your life, like just this one. See this one here, this kind of trade here that just happened how many days? 2 days ago. Today is the third day. See, this trade can change your life. This one here can change your life. Just imagine if only you traded this for this whole month, stayed up to this day, 70 something days, about $350. You made it in 3 days. $350. It has covered up for your whole month. Just one trade, only one. And believe me, this trade is about going down again. It's about dropping again from that daily level. You just have to wait for a clearer signal because the bullish momentum is still there. It's indicating off daily order block. That is why this market is slowing down here. If you go to the daily time frame, I will show you why this market got stuck at this point. I'm going to use my Fibonacci too. So right off at this point, you see this daily block here. That is why this market is reacting. So you don't think this is just happening because the market has. So you get this daily block, this last candle here before that engulfing candle, right off at the body, you can see. That is why the market is reacting up there. And if I want to place my fib too, I think my fib will have to do with 78.62. So you get what I'm saying? So you guys should join again. Let's start up again. The call is about going off. The call is about going off. Let me change this color to black. Okay. All right. So you guys can come up again. So right.